Some traders would say that interpreting Ichimoku is as much of an art as a science, but as an algo trader, that's no good to me. I need concrete rules that I can build into code so that my algos can then make trading decisions on my behalf. So I take a look today at some of the potential implementation rules surrounding the Ichimoku Cloud. Stay tuned, back after this brief message. Darwinex is a UK FCA regulated broker and asset manager on a mission to disrupt the financial trading, investing and asset management industries. If you're a talented trader looking to attract investor capital to your strategies, Darwinex is the fastest way for you to do this. We enable traders to raise third-party investor capital and then charge success fees on high watermark profits. Additionally, Darwinex itself invests in its traders with our seed capital allocation program that allocates up to 90 million euros per year in successful trading strategies. So, if all of that sounds interesting, learn more by clicking on the link here, or you can find further links in the description right below. Now back to today's tutorial. We've already covered the mechanics of the Ichimoku Cloud, or the Kumo, in previous episodes. But how do we use it to improve our trading decision making? That's what I'm setting out to cover in today's episode. So this is the next part in a series I've called Spotlight on Indicators. And today I'm going to look at 7 aspects of interpreting the Ichimoku Cloud. The first of those is when price passes through and then over the Ichimoku Cloud. And we can see an event like that occur on the left hand side of the chart here, where price has come from below the Kumo. It's then gone through the Kumo and broken out the other side. Now the theory goes that when price does this, providing the other components of Ichimoku also agree, this could be the beginning of a medium to long-term trend. Now, in terms of what those other components of Ichimoku need to be doing to confirm this, I'll cover that in more detail from the next episode when I start to look at trading strategies. But for now, let's just focus on the Kumo itself. So price has passed through that cloud, broken out of the upper edge of the cloud, and as you can see in this particular case, this was the start of a fairly substantial trend. And so that is the first interpretation of the combination of price action with the cloud. And that then brings us on nicely to the second interpretation. And this is while price is over the cloud. And one of the primary interpretations here is that the cloud will now provide support to that price action. So as we can see, as price progresses, we have a number of pullbacks, but neither of those reach the cloud. But if we scroll to the right here and look at the continuation of that, we can see that the price does indeed hit the cloud at this point here, but when it does, price then rebounds and continues with the uptrend. Now, in terms of where that support actually occurs, it could happen from the top edge of the cloud anywhere down to the bottom edge. If we did, however, see the bottom edge of the cloud breached and the price coming below that, that usually means that that support has now been broken, and we might be looking at a change in that medium to long-term trend. But in this instance, it does get that support that it requires in order to continue on its way. So the next interpretation here is exactly the opposite of the first one that we looked at. But here, price is passing through the cloud in the opposite direction and is breaching that lower boundary of the cloud. And as I said a moment ago, the interpretation here is that this is possibly a change in direction of the trend. So returning to our price action here, we can see that that happens here, signifying the end of this very long uptrend that we've seen. But it's interesting that the price doesn't just go straight through, it does initially get some support, as it did previously, from the top of the cloud. And so the price comes down and gets pushed all the way back up again. We then see some support again before eventually the price does come down and then relatively easily leaves the bottom of the cloud, indicating the beginning of a new downtrend, which we can see here. And again, that brings us on to the interpretation of when price is underneath the cloud. And here we would expect the Kumo now to start providing resistance to that price action. And we can see if we scroll along a little here, initially, as soon as the price action hits the bottom of the cloud, the price action sent rather strongly downwards again, indicating that resistance. But then on the second attempt, the cloud is breached, informing us that the medium to long-term downtrend has now come to an end. And so we've now covered price action going through the cloud in each direction, and we've covered how that can then be used to our advantage potentially when price is both above and below the cloud. But what happens when price is located inside the cloud? Well, this is interesting because generally speaking, this is classed as an area of indecision, because we can think about this from two perspectives. Let's look at when the price action went through the cloud here. And while the price action is mid-cloud, we could reasonably expect the bottom edge of the cloud to provide a level of support in this case, meaning that price may well change direction and carry on up with the uptrend. And if you remember, that's exactly what happened here when price action entered the cloud the first time. However, every trend must end eventually. And so the cloud is not going to offer support indefinitely. And at some point, price will have to break through that cloud, indicating a change in direction. And so while price is in the cloud itself, will support hold up and allow prices to continue upwards? Or is this the end of a trend and our price is going to start going downwards? We simply don't know, which is why when price is in the cloud, that's this area of indecision or equilibrium, and we actually have to wait to see what happens next to give us that indication of which direction price will then move in. So in terms of opening positions in a particular asset, this is probably an area you want to avoid, and you shouldn't be opening any positions while price is inside the cloud here, because it's probably somewhere around a 50-50 outcome. Instead, you probably need to hold tight and see what happens next before making any decisions. Now, the next characteristic of the Kumo is what I've called the Kumo switch. So this is where it will either turn from a bearish to a bullish Kumo, or vice versa, the other way around. But remember, because the Kumo is plotted 26 periods ahead of the current price action at any time, we have to look at this 26 bars ahead of the price. So let's take a look at this in the chart that we've been looking at. So here you can see when the cloud turns from green to red, this is the indication that we've gone from a bullish Kumo to a bearish Kumo, and the switch happened at this point here. But of course at the time, because this is plotted 26 bars ahead, let's just try and find the price action 26 bars go, which was this green bar that we see here. So this would have been the current bar at the point we'd have first seen this Kumo switch. And in many respects, that might have been an additional clue to what will happen next. Because at this point here in the Kumo, remember, we're facing this decision point. Will the bottom of the Kumo act as support, sending the price back up, or will it break down through the Kumo? Now, the fact that we've seen this go from bullish to bearish probably adds some weight to the fact that it's more likely now to break through and we're starting to see the beginning of a new downtrend. Because once the breakout occurs, we have that as a signal plus the switch of the cloud as another signal, both occurring at approximately the same time. Now, the final characteristic that I want to look at is what I'm calling the Kumo depth. And this can give us valuable information about the strength of a trend, or the volatility within that trend, if you like. But what do I mean by depth? Well, we can see at this point here, the cloud is really quite wide, whereas at this point here, it narrows off significantly. We have similar over here in the bullish Kumo. So we have a very wide depth to the cloud here, whereas it becomes extremely narrow at this point here. So what does this tell us? Well, generally speaking, a wide cloud tells us that the conditions are highly volatile, and so the trend that we're looking at is likely to be much more powerful. But again, we have to remember that we're looking at the cloud here 26 bars ahead of the price. So when the cloud narrows at this point here, this is actually as a result of the price going flat during this period here. And then as soon as the trend ensues and goes powerfully downwards, that's when we see the cloud start to open up again and we see that depth become larger. So if you're a volatility trader, then by simply measuring what the distance is between the Senkou span A and the Senkou span B, that can give you that indication of the volatility of the price action as it's happening 26 bars this way, which of course is the current price action at that time. Now, I think it's worthwhile just going to the very end of the price action here to illustrate that point. So it's much easier to see here that we have the current price right here, but any interpretation of the depth of the cloud should be happening over here at this point. And actually, as we speak, we can see that the price action has come through the cloud following an uptrend, and then price has broken out beneath that cloud very strongly. And so this is probably an indication that a new medium to long-term downtrend has now begun. So there we have it. That's 7 different characteristics of either the Kumo or the price in relation to the Kumo, and how they are generally interpreted and the kind of information that they give out. Now, in the next 5 or so episodes, I'm going to start putting everything that we've studied so far together for each of the components of the Ichimoku indicator and look at some full trading strategies that use the information that those components provide us with. The first of these that I'm going to look at is what's called the Tenkan Kijun Cross. The second strategy will be the Kumo breakout. And then following that, I'm going to probably look at another 3 or maybe even 4 different Ichimoku strategies before moving on to actually perform some R&D and also backtesting of those strategies. And this, of course, is where we start to see how well Ichimoku really does perform and whether Ichimoku does indeed offer us a valuable tool for us to use in our trading or not. Okay, so that's all we've got time for this episode. Please do give me a like if you've got value from today, and also subscribe to the channel in order to get notified when new videos get released. But now until next time, trade safe.